Hello everyone and welcome back to the tax file. Today we are going to talk about one of the biggest frauds ever uncovered in the Indian market. SEBI has released an interim order more than 100 pages long. So against the Rajesh Exports Limited, one of the Fortune 500 companies in gold refining and manufacturing in India, and the numbers are really shocking. SEBI says company has misstated revenue of 15 lakh crores, exactly 15 odd lakh crores. In this video we will break down in a simple terms. We will make the concept into 5 to 6 types, how they have made, how did they hide these numbers using complex group structure, that is subsidiary and sub-subsidiary or step subsidiary, and what where the fake trades with the stockbroker never has happened, and how the revenue has been made misstatements in the profit and loss account the company made, and how the company has ended up in the personal bank accounts with the promoters and non-genuine sales and netting of the debtors and creditors, which is not really in the there. So we are going to start. Let's start with the main problem. The main problem is like the group structure. The group structure is very complicated, so we have to go through properly. Almost 99% of the company's revenue is from its subsidiaries, that is established majorly in abroad. So the two major companies are global gold refineries based in Switzerland, and the subsidiary of GGR, which is Walcombe SA. So now we hear the twist. So GGR is the just holding company. It has no real business operations, but somehow the revenue was shown as 100 of times higher than Walcombe. So we are coming to Walcombe. Walcombe was only recording some small processing charges, but GGR was booking a full market value of the gold as its own revenue. That didn't add up. When the SEBI asked for the supporting records, the company refused by saying the Swiss data protection laws does not allow to share the supporting document to the SEBI. But the SEBI pointed out that something important, that is Swiss policy will be applied only for the individuals, not for the companies. So the whatever the excuse which the company has claimed is doesn't hold good. So now let's look into Indian side of business. So when we come to the Indian side, the consolidated revenue of the company is at 15,44,899 crores, and out of it standalone, that is the Indian market, whatever the Indian company Rajesh Exports Limited has a turnover of 26,486 crores. Out of that 26,000 odd crores, the standalone basis 66% of the Rajesh Exports turnover come from the single company name called affluence shares and stocks. But here's the shocking part. SEBI found that Rajesh Exports was never even a registered client of affluence. So where these transactions has happened? So the actual transactions happened, so-called sales and purchases worth rupees 11,400 crores were actually a gold derivative trades done by the promoter, that is Rajesh Mehta, in his personal capacity, and money for these personal trades, it comes straight from the company's own funds. On top of that, Rajesh Exports boosted its revenue by adding foreign exchange gains and mutual fund interest under the revenue operations. So first thing is he has routed the company's funds to trade to make the gold derivative trades, and second one is the exchange fluctuations, income from exchange fluctuations, and from the interest from the deposits, which they have classified as directly into the main operations, which should not be, which is not allowed actually, and it's a violation of Indian accounting standards. So now the part gets even stronger. Rajesh Exports claimed to have settled around 2,000 900 odd crores of trade receivables by adjusting them as from the trade payables. So the actual thing comes here is the trade receivables which is go, which is old import invoices, which is more than 10 years old invoices. So the second one is they are involved completely different parties, and they didn't nothing do with that original transactions. For example, one so-called counterparty was a company named AI Jamilat. Its registered email address was event exist, and it is not eligible to receive the emails itself. Another party trade license is actually got cancelled, and it's a totally different business. So they have already done the whatever the receivables has netted off with the payables, which is actually to be done, and the receivables which doesn't even receive old receivables which won't come itself. So this is another part, and the comes to the main part where the company funds has been transferred to the promoter, that is Rajesh Mehta and Siddharth Mehta, son of the Rajesh Mehta. So SEBI found that company funds were being routed straight to the promoter's account, over 338 crores to the Rajesh Mehta and 21 crores to his son Siddharth Mehta. Many of these transfers were marked as unspecified. Some were even used to pay his personal credit cards. So the company and there is another company called Elest Private Limited, a startup controlled by the promoters. Rajesh Exports transferred more than 565 crores to Elest, but only a small portion of this has been get approved from the board. So and while communicating with the SEBI, the company has sent one email. The company has admitted in that email the company has been admitted that funds are routed through personal bank account of the promoters to hide where the money comes from. That is like they are admitted that they have done some. They want to hide the source of the money, which is like to make what we can say. To hide the source of the money. So due to which, so after explaining all this, what does all it mean for investors? We have to, this is the main thing, we have to think it up from the investor side. So the impact is very huge. At the peak stage, that is in 2023, Rajesh Exports has a market value of 30,000 plus crores. But since the investigation has been begun, the stock has crashed, wiping out nearly around 12,725 crores, that is 12,725 crores of public money. SEBI has now taken stronger action and banned all the trading in the company's shares. The company has told to fully cooperate, and a new forensic auditor will be admitted to dig deeper into the books. The story is far over, and we will all keep you update for you. And at last, this is the synopsis. The company has misstated 15,15,385 crores, representing 99.8% of the revenue, and 12,557 crores in the standalone financials, and intra-group investments were knocked off, and there is a company's funds which has been transferred to the personal accounts of Rajesh Mehta and Siddharth Mehta. Thank you. If you found this breakdown useful, hit like and subscribe to the tax file, and turn on the bell button. Never miss the deep dive. Until next time, stay informed, stay alert. Thank you.